Good evening and a warm welcome to In Your Money. I'm Bryan. This evening we're focusing on the investment world. I'm a great Charles Dickens loved Charles Dickens, and it reminds me what's been happening in the last few months is what was written about in The Tale of Two Cities. It was the worst of times, it was the best of times. In the Sona speech delivered by Cyril Ramaphosa, he referred to both the best of times and didn't really refer much to the worst of times. The best of times included a successful hosting of the G20, the cleanup of roads surrounding areas where the event took place, South Africans' removal from the grey list, lower inflation, a decline in the oil price, a stronger rand, and a rise in the gold price. The worst of times included persistently high unemployment, signs of collapsing infrastructure across South Africa, evidence that even employed individuals are under pressure, reflected in withdrawal from pension funds under the two-pot system. Repo rate, in my opinion, remains relatively high. Increase in various costs, including the latest rise of just under 10% for members of the Benitez Medical Aid. Joining me this evening from the Zoom room in Cape Town is my current guest, Henry Biddlecombe. He's CEO of AG Capital, the focus hedge fund arm of the Anchor Capital Group. Henry, good evening to you. Lovely to have you on the show.
Howdy, Bryan.
Yeah. Henry, despite both the positive and negative developments, South African markets and the currencies have continued to strengthen. Please put this into context.
Yeah, the currency is an interesting one, Bryan. It's obviously something that affects us all as South Africans. You know, we spend rands, but we mostly invest dollars. And the exchange rate has a huge bearing on the return of those portfolios. So, you know, the strange thing is, the rand-dollar exchange rate has very little to do with what's going on in South Africa, actually, and far more to do with dollar weakness, which you're seeing play out across all of the global currency pairs against the dollar, not just the rand dollar. And then on top of that, you've obviously got a very powerful rally in commodity prices, which of course is very supportive of our terms of trade. And that has an additional, albeit smaller, impact on the strength of the rand. I always refer back to purchasing power parity. And on that basis, you know, we can see the rand continuing to strengthen all the way into the low 15s or even high 14s if the trend in commodity prices continues.
Well, let me ask you this question, two questions. Do you not think at some stage the dollar is going to be oversold? And the second thing is, are you anticipating commodity prices to continue increasing? I mean, we had the run up to 5,758. We then had a retracement back to 4,6. Now trading, last I looked, around about 5,000. Your comments and thoughts?
Yeah, it's very plausible. I mean, this is typical sort of late cycle strength in commodity prices. It can go on for a lot longer than you think. You know, even if they hold at these levels, I can see further end strength. You've also got kind of a bigger gap opening up between American and South African monetary policy. You know, our Reserve Bank held rates where they are, I think maybe to your and my disbelief, actually. But, you know, those interest rate differentials also have an impact. So, yeah, I think that the rand can strengthen further, and actually that is my best case.
Yeah. You know, Henry, I'm very interested because the latest Reserve Bank regarding inflation is keep it around about 3 with a 1% differential, and yet prices are increasing a lot quicker than that and a lot higher. I see government officials have been offered 3.6, which is within the range band. But if you take a look at Benitez, 9.8%, and other costs rising, it's way above that. And I don't understand. I mean, is the expectation that companies should really only give increases based on inflation? And obviously some merit, but your comments about that. I mean, if we're talking about a lower target, then surely we shouldn't see an electricity or water increase or rates and taxes in Cape Town of much more than the 3 to 4%.
Yeah, I mean, at the end of the day, it all boils down to how the measure of inflation is constructed. And I think for a long time, you know, most consumers will tell you that it isn't necessarily a reflective of their own experience of inflation. And I guess it's not. And there are many factors which have a big impact on our kind of disposable income, which are going up in price a lot faster than the official measure of inflation would suggest. So, if you're kind of a middle to upper income earner, is CPI reflective of your inflation experience? I would say absolutely not.
Yeah. Henry, two things we need to consider. We need to consider obvious interest rates, and also I need to understand, are you comfortable with this inflation targeting, and are you comfortable furthermore in the fact that we're going to move from a prime interest rate, 3.5 above, to repo rate, to a repo rate plus? And the comments made is we're moving to that system simply so people understand it better.
Yes, okay. There are two questions in there. So
Yeah.
One, do I agree with inflation targeting? Yeah, of course. I mean, the primary function of a reserve bank is to balance inflation and growth. Ideally speaking, you need a little bit of both for the economy to work. I do think that the current kind of target inflation range makes sense. We can debate whether or not that official measure reflects the consumer's experience. That's a different story altogether. I'll tell you what I do disagree with, Bryan, is, I guess, the sort of relatively hawkish stance that the South African Reserve Bank have taken. I think we could afford to be 50 basis points lower than where we are now. I think the South African consumer needs it. I think you've been saying it for a while, and I agree with you. The second question around prime and how banks reference it when pricing debt to consumers, I think it's a bit of a storm in a teacup, really. The banks have been doing it this way for a long, long time anyway. If you're a good customer, you normally get prime less. So going to a repo plus kind of methodology makes, I guess, academic sense, but it's not going to have any real impact on the cost of debt that is charged to consumers and businesses.
Well, Henry, I'm pleased you're not our governor, because I think even 0.5% is too little, but we'll talk about that another time. Now, let's talk about, we've got the budget on Wednesday, and what are your thoughts, particularly with tax collections from commodity companies being so high, and what is your expectation for GDP going forward?
Yes, I mean, the bond, it's always the right person to ask about the budget is always our bonds, right? Even though it's not a person, because the yields tell you the story. The strength in our bonds is telling you that fiscally South Africa is in much better shape. The trajectory is much better than it was a few years ago. And you can you could say that our sort of country risk premium is narrowed. So that's all positive. It's incrementally better, I guess, would be my take. In terms of tax receipts from the commodity producers, it's a blessing, isn't it? I mean, it relieves pressure off of the fiscus. It will sustain for as long as commodity prices remain at these levels or go higher. And one just has to hope that government don't go and blow it now. Let's use it to our advantage. Although our track record in the past on that's not so great.
And Henry, just last one, GDP. What's your expectation for GDP 26 going through to 27?
I haven't really penciled in an exact number, Bryan, but it's kind of low single digit.
Yeah, Henry. On the one hand, there are companies investing heavily in AI, while on the other, many others are benefiting as recipients of that spending. And they estimate to spend $600 billion, yes, I repeat, $600 billion in the coming year. What impact do you think this has on the top 12 US listed companies?
Well,
Henry, and I'm not using the Magnificent Seven. I've extended that a bit further, because you've got those who are spending and those who are receiving. And I think we've seen some great results come out in the last 3 weeks. Yet the market is not happy, and the shares have been marked down.
Yes. Okay, so you've split them into two groups: those that are spending and those that are receiving. But I'm going to split it into three. So we'll go with your two. And then we'll add a third group, those who aren't spending but aren't receiving, someone like Apple. I'm worried about the first two groups. The guys that are spending are in an arms race, and the outcome is not obvious. what is the eventual return that those companies will earn on these hundreds of billions of dollars that they're spending? The truth is we don't know. We don't know if they're going to earn super profits on all of the tokens that companies buy to process AI requests, or is the whole thing going to become commoditized and it's a big race to the bottom, and these companies end up earning very low single-digit return on investment on all of this capex? I suspect it might be the latter, and that will be very bad for the PEs of the big spenders, the Magnificent Seven that you reference. So I think those stocks are vulnerable here. Secondly, the companies that are receiving that spend, like NVIDIA or TSMC, obviously it's a huge blessing to them, but I do think that their current earnings multiples are pricing in an almost infinite capex cycle, which is of course unlikely. So I think that those share prices have probably run too far, too fast. And when and if that capex cycle turns, there's probably quite a bit of downside in those stocks. Now, that brings me to the third bucket. Look at a company like Apple. They've got a very strong balance sheet. Unlike the other tech companies, they have not chased the AI arms race. They haven't spent hundreds of billions of dollars of capex. And it looks like they might be able to turn around at the end of this thing and choose who they buy, or just build an ecosystem on top of the best AI engine that someone else has paid to build. So I really like Apple. I don't like the other hyperscalers that have spent too much, and I'm worried about the multiples on the chip producers, if that answers your question.
It does, Henry. We're going to take a short break. Stay tuned, and we'll be back shortly.